Hello and welcome. Good morning. You're watching Market Cafe on ET Now with me, Soumit Sarkar, and my co-anchor, Vinny Motiwala. Let's first take off the cues on what we are getting from the US market, the FOMC meeting. Vinny, please tell us what we have from there.
Absolutely, and just looking at the US markets, obviously we do come to know that they've taken one more rate hike coming in the Fed meet, and because of that, the US markets actually saw a bit of a fall coming in last night as well. Now look at the US markets; they snapped their two-day rally, especially after Jerome Powell reiterated his hawkish stance, while also signaling that the central bank will actually be taking. Getting close to, I'm sorry, sorry for that, getting close to reaching the end of tightening cycle and pushed rates from near 0 to 4.5% since March. Now, other than that, it was a very volatile trading session that came in the US markets as well. And when you look at it in terms of the S&P 500, whether you look at the NASDAQ or even the Dow Jones, all of them actually managed to close in the red last evening. So overall, Dow Jones was down 0.4% in trade, S&P 500 down 0.6% in trade, while NASDAQ was down almost 0.7% in trade as well. So yes, we saw a bit of a weakness coming in terms of especially the commentary after the Fed actually took the rate hike coming in as well. So all in all, handover seems like a bit muted to a bit weakish handover coming in from the US markets on it.
Well, moving on the crude side or the commodity side, if you see Brent crude continued to surge higher, and currently they are trading around the $83 per barrel mark. Now, this is despite the fact that there was an interest rate hike, and given the fact now why crude prices are going up, firstly it's because of the fact that dollar index has come off sharply from its high, and IEA has reiterated that 2023 demand outlook. So there is no change when they are saying on the demand side, and that's the main reason why we are seeing such kind of surge when it comes to Brent crude prices. Now from its recent low of around $76-77 per barrel, Brent crude has again come back to the $83 per barrel mark. Now other than that, if you see the Singapore gross refining margins, they also surged back to around $9.2 per barrel. Now yesterday they were trading around $7.9 per barrel mark. So this surge in the Singapore gross refining margins will definitely be beneficial for the oil marketing companies and oil refiners like MRPL and Chennai Petro. Now this was also on the back of a surge in product cracks that we had seen, and this could be because of the stable demand outlook that IEA has given. On the gas side, if you see European gas prices continue to they slipped a bit because the inventories were still higher at around 87%. Henry Hub was down to around $6.4 per barrel, and JKM, that is the Japan Korea marker or the Asian benchmark, continue to remain stable at around the $33 per MMBTU mark for trade yesterday.
Okay, let's move on and talk about the big events that actually we are watching out for. Obviously, we did have the FOMC and the Fed rate decision, but today we'll be watching out in terms of the ECB, European Union's rate decision. European Union by a central bank as well as UK central bank, both their rate decisions will be coming. That's the ECB as well as the BOE. We'll be watching out for the industrial production data in the US markets, while the initial jobless claims also in the US markets. Important factors and data points to watch out for. In terms of corporate actions in the domestic market, let's watch out for Shriram Property. Lock-in period opens up today for Shriram Properties. In IPO action, we'll be watching for Avance holding IPO last day for Landmark's Cars IPO as well. So these are the big events and corporate actions that we are watching out for today's summit.
Well, moving on to global news now. Interest rates could go beyond the peak rate estimates, said Jerome Powell, even after the US CPI data came in much below the expectations. Now, the policy committee raised rates by around 50 basis points to a range of around 4.25 to 4.5%, the highest ever that we have seen. Now, this is the 7th Fed rate hike this year. Powell added that they need more evidence of inflation cooling off and will stay the course till the job is done. He also asserted that there will be no rate cuts until they are confident that inflation has eased off.
The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024, and 2.1% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective.
And Russia's economy shrank 3.7% year-on-year in the third quarter of 2022. This was according to the data from a Federal Statistics Service. This is an improvement on the previously reported 4%. Western sanctions imposed over Russia's occurrence have actually sent Russia's economy into a contraction this year. So that's the news coming in from Russia.
Well, the US import prices fell for the fifth straight month in the month of November, pulled down by the declining cost for petroleum products and a strong dollar. Import price declined nearly 0.6% in November. However, the price rose 2.7% on a YY basis.
Peru's defense minister announced a nationwide state of emergency. The emergency will take effect in the next few hours. Soldiers are being deployed to help police rein in the violent protests, and protests were triggered by the removal and detention of the former president Pedro Castillo.
Well, Morgan Stanley raised its outlook for China's economy in 2023. The firm also predicted a rebound in activity will come earlier and be sharper than expected. Now, Morgan Stanley also raised its forecast for the country's gross domestic product in 2023 to 5.4%.
And Moscow said no Christmas ceasefire was on the cards. This is after nearly 10 months of a devastating war in Ukraine. The release of dozens more prisoners showed that some contacts between the two sides remain.
With that, let's slip into a short break and we'll be back with more domestic news on the other side.
But here, welcome back, and you're watching Market Cafe on ET Now. Now, the tech titan Infosys turns 40 years old, and his journey has been nothing short of incredible. From its humble beginnings in the 80s to a company with a market value of over $70 billion. My colleague Tamanna is here with a report from Infosys campus in Bangalore.
We're at the Infosys headquarters, where this iconic Indian IT company is celebrating its fourth decade. And I have a very quick opportunity to show you in pictures how the magic all began. So this is actually the certificate of incorporation of Infosys, which you're seeing over here. A little piece of history for a company whose journey has, in a sense, mirrored India's own growth story. This is their first order from Data Basics Corp in 1982. Look at the date. July 5th, 1982 is when this order took place. And of course, we know the genesis of the story. It's 7 engineers led by Mr. Narayana Murthy who came together to establish Infosys. Some of those pictures over here harking back to the days, and these faces have now all become iconic. This is also a good insight into the humble origins of the company. So they have a picture up here in their gallery on the campus of an apartment where the idea of Infosys was born. I found this quite interesting. And of course, the grandeur of this campus has been well documented. But I just want to show you a few other pictures that I thought were nice. One was the actual certificate that they got. The first time that the company got a sanction to use this land and build the campus over here. The first site of the Infosys campus, harking back, this is the first Infosys office in Jayanagar in Bengaluru, and the Infosys offices in Koramangala, Bengaluru. This is the heritage building, the first one on the Bengaluru campus. Why it is such an exciting story? Of course, Infosys's successes are well known, well celebrated. The company is very, very closely tracked, but it also is an inspirational story about how an idea well executed with due diligence and constant innovation can lead to great things.
And we also had the 5 founders sit together and reminisce about the good old days. While Narayan Murthy admits that it was a mistake to not give positions to children of Infosys founders, Nandan Nilekani chimes in saying there shouldn't be a reverse discrimination. Listening to what they had to say about their journey so far.
Happiness is a positive cash flow. So we have all absorbed that. We are all into positive cash flow. The only question I asked Jayesh and Nilanjan is, how much is the incremental cash to the balance sheet last month? So I learned that from him. So it's maybe old-fashioned and all that, but that's what we think. So I think the moment you're not having positive cash flow and you're burning cash, while there are arguments that when you burn cash, you can grow fast, burning cash is, you lose discipline.
I was completely wrong. I take back that. I admit I was wrong. So today, my view is that you should not worry about what nationality, what heritage, whose son you are, whose daughter you are, as long as you have the best competence for a position. But you have to go through the proper process of maturing in the organization before being given before being given suitable position or suitable responsibility.
What we see as newer employees are joining us from college today is there is tremendous interest in working on new technologies, doing new learning. There's not only interest in having a career which lasts a number of years with a company. There's much more on learning and developing what they're doing, and that's what we are focused on. Nandan mentioned earlier the reskilling program that we put in place. My view is it's the best that there is in the industry. Any person within Infosys has the opportunity to learn a new skill which is more relevant today to clients. Mr. Murthy built Mysore, which is the best in-person learning that is anywhere in the world. Nandan has built something called Lex, which is for us today the online learning experience that all of us have. The coursework that's available there, we see usage by employees on their own free times.
What has got us where it is today includes not just the founders, it includes 350,000 people now, plus many more who have passed through the portals of Infosys. You know, it's a collective, I think, collective effort of all the people. Yes, you know, there have been leaders who have driven the company, and there will be leaders in the future too. What has made us successful is that, and we saw this yesterday, you know, in some of the panel discussions that we have had as part of the 40th anniversary celebration. Everyone, you know, demonstrated or talked about their passion for Infosys.
If you look at the last 40 years, you can see it at every step of the way. We have done so many things first in India. We were the first Indian company to get CMM level 4, CMM level 5. We were the first Indian company to have employee stock option plan, which created all of this wealth. First Indian company to be listed on NASDAQ. So each one of these are actually execution milestones. Now, when I look at one of the fundamental premises which we had in 1981, it was that technology will become eventually ubiquitous. And that has happened in many ways. Today, technology is ubiquitous, but I don't think the story has ended. I think in the next 100 years, the 60 years which Dandan will see through, I think technology will even become much more ubiquitous. So the opportunity will continue to.
We believe, as Shibu has and Chris have already said, we have laid the right foundations required for that with a core set of values. As long as that is being followed, the C life, customer comes first, leadership by example, integrity, transparency, fairness, and execution excellence. This is being done, and that culture has been created, we believe, by the leaders. And as people say, culture eats the strategy for breakfast. So culture is very, very important. I believe we have been able to create that under the leadership of Salil is carrying that forward. It's very, very important.
Okay, that was all about Infosys, but we do have a very exciting lineup for you all on their markets, and we will be starting with Rajiv Thakkar, CIO at PPFAS, a mutual fund at 9:20 a.m. We have Rashmi Sen, CEO at Phoenix Mills, to talk about the realty trends. How is that shaping up at 9:35 a.m. In terms of the recession risk coming in, 9:45 a.m. we have Shiva Kumar, CFO at G Shipping, to talk to us about that. While in terms of impact of easing prices, we have Vijay Kumar, Vice President of Finance at NCC Limited at 10:20 a.m. While in terms of the movie blockbusters, what's shaping up over there? We have Karan Torani joining in with us at 10:40 a.m. from Elara Securities. Welcome back, and you're watching a Market Cafe on ET Now. Let's just have a look at, in terms of the US VIX, that was at around trading with a negative of around 6.25%, while in terms of obviously US markets, we did take a round up that it was closed in the red. Now, even when you look at the Asian markets, Kospi has opened up in the red with a decline of 0.9% in trade. We're seeing Hang Seng seeing a decline of 1.7% as of now. Sharp fall that has come in Hang Seng as well. Shanghai too trading with a decline of around 0.4% in trade, while Nikkei and ASX 200 too have opened up in the red. So it seems like it's indicating a bit of a weak start, what we are understanding, at least even for the Indian markets as well, because the Asian markets too have opened up in the red. So not much excitement that we're expecting on the D Street. As of now, we can see the SGX Nifty that is indicating a decline of 0.3% is what we're seeing on the SGX Nifty. That means we could be expecting muted to a negative start actually coming in for the Indian markets as well. So that's the handover that actually we're getting in from the Asian markets as well.
Well, with that note, let's look at what are the big brokerages that have come in overnight and which stocks will remain in focus. And we have Vamakshi to give us those details.
Well, absolutely. Let's first start off with banks. We have Macquarie's report on coming out on banks, and they believe that the deposit rate war is seen brewing as expected. Margins are expected to peak out in the third quarter of FY23 as well. In fact, SBI yesterday hiked its deposit rates by nearly 15 to 100 basis points. HDFC Bank was not behind as well. Since the bottom, they have hiked their deposit rates by nearly 210 basis points. As far as Macquarie is concerned, HDFC Bank and ICICI Bank are their top picks. Apart from that, we also have SRF on our radar. We have a note that is coming from Jefferies, and they believe that falling falling raw material cost will aid specialty chemical margins going ahead. They're seeing some sharp year-on-year decline in India's chemical exports as well, and the valuation is one standard deviation above the 3-year average in their opinion, which is why they've maintained a hold on SRF. They've given a target price of 2,200 per share. And lastly, we will be watching out for Indian hotels. We have a note coming from ICICI Securities, and they believe that the best is yet to come for Indian hotels. Demand trends have remained intact in third quarter, which is why they've maintained an ad rating on this counter, given a target price of 366 per share.
Okay, Vamakshi, thank you so much for that update coming in terms of the brokerages. But Upasna, very good morning, and coming to you, Poonawalla FinCorp has actually approved the sale of its housing subsidiary to TPG. What's the update on this? What are more of the details that you're actually picking up?
Well, good morning, Winnie. So, Poonawalla FinCorp has approved the sale of Poonawalla Housing Finance to TPG Group for a deal value of almost 3,900 crores, and the deal is expected to be completed within 3 to 6 months, subject to regulatory approvals. While talking about the transaction aims to maximize shareholder value in the long term, as the company is set to focus on technology-led growth across the financial services. Well, the company has also highlighted that it's working towards achieving its Vision 2025 with a focus on 3 main areas, that is growth, asset quality and profitability. Talking about the subsidiary details, the AUM stands at 5,600 crores and ROA stands at 2.4%. In terms of the key rationale of the deal, the value in unlocking of the housing finance subsidiary is in line with the management objective, which I highlighted in the Vision 2025. Well, management also believes that the growth opportunities for the standalone entity are plenty, and it aims to continue building a strong retail franchise in consumer and MSME financing. While going forward, the company targets the AUM growth of 35 to 40% on YoY basis over the next 3 years, and ROE is likely to range between 4 to 4.5%. In terms of net and NNPAs, it is also expected to remain below 1% is what the company is targeting going forward.
Well, definitely we'll keep an eye out for this stock, because the brokerages are also saying that the company's standalone book value is expected to increase by nearly 30% post this deal. Now, moving on from housing finance to pharma space, JB Chemical is looking to acquire Glenmark Pharma's Razel portfolio for over 300 crore rupees. Vamakshi joins us with more details on the same.
Well, absolutely, Soumit. JP Pharma is looking to acquire the entire Razel franchise from Glenmark Pharma. Now, this acquisition amounts to nearly 314 crores with rights to sell in both India as well as Nepal. Now, the company has acquired only the brands and comes without sales force. And this acquisition will be funded through a mix of internal accruals as well as long-term debt. Now, let's understand a little bit more about the Razel franchise. Razel franchisee sales was stood at nearly 29 crores in the first half of FY23. And in fact, Razel ranks among the top 10 brands in the Rosuvastatin category as well. We also have a note that has come in from Credit Suisse on JB Chemicals, and they believe that the Razel acquisition could benefit from fast market growth. The acquisition is EPS neutral in their opinion, which is why they've maintained an outperform rating on JB Chemicals. They've given a target price of 2,300 per share. So largely that was the news flow surrounding JB Chemicals, and that is the reason why this counter will be in focus today.
Thank you so much for those updates coming in. But let's move on and get to the other stocks that are actually going to be in focus as well. And Ashesha, what are the stocks that we should be keeping on our radar today at 9:15 a.m. And a good morning to you.
Hi, good morning. So IRCTC will be the first one in focus in today's trading session. The company has gone ahead and announced offer for sale for shares that are held by the promoter, that is Government of India, and this will be done through stock exchange mechanism. Offer for sale is for up to 2 crore shares, which translates to as a percentage of total equity stands at about 2.5%. Now there's an option to sell additional 2 crore shares, which is in addition to the primary 2 crore shares that are offered for sale by the company. Apart from that, we will also have Dilip Buildcon, which will be in focus in today's trading session, and this is because the company has executed contract agreement with Gujarat Metro Rail Corporation for Surat Metro Rail Project Phase 1, and the project cost stands at about 1,061 crores. So on the back of this agreement, which has been signed by the company, Dilip Buildcon will be in focus in today's trading session. Moving on to Power Grid, then the company has gone ahead and informed the exchanges that company has accorded investment approval for transmission system Now, this transmission system is for evacuation of power from REZ in Rajasthan, and the estimated cost of this particular transmission system stands at about 330 odd crores. Moving on to SBI, which will also be in focus, and that is because Central Board of the bank has approved raising capital by way of issuance of Basel III compliant debt instrument, and the total quantum of capital raise stands at about 10,000 crores, and this will be done for additional tier 1 capital. So on account of this capital raising approval being received, SBI will also be in focus in today's trading session. And lastly, Shriram Property lock-in period ends, and hence on the back of this, Shriram Properties will also be in focus today. Back to you.
Well, thank you, Ashisha, for this exhaustive list of stocks. While we have Restaurants Brands Asia, which is the distributor of Burger King on a pan-India basis. Is the competitive intensity for this company expected to rise going forward? Winnie will give us all those details.
Absolutely. I think it's surely going to rise, and especially we've seen a lot of issues coming in when in the north and east you see the region Connaught Plaza, which is McDonald's franchisee in the north and east region. Westlife Development, obviously we know, is in the south and west. So yes, over there we were seeing a lot of competitive intensity increasing in the north and east, because now the issues that they had in terms of between the franchisee operators, that was Mr. Vikram Bakshi, as well as the brand owner McDonald's, that has started easing off as well. Let's not forget that in 2020, McDonald's had appointed Sanjeev Agarwal as the new development licensee for the outlets in the north and east region as well. And actually post-COVID is when we started seeing a lot of changes coming in, because it appointed a professional team in terms of that as well, a new CEO, CFO coming in as well, and obviously Restaurant Brand Asia had a very good run because there was not much competition because of these issues that was there by Connaught Plaza restaurants in the north and east region, and around 55 to 60% of their outlet reach is there in the north and east region. Less competitive intensity was benefiting them so far. Now, Connaught Plaza has actually come out with more new initiatives coming in as well in the past few months, which will actually add more to the competitive intensity for restaurant brands. And obviously, they plan to even double their stores in the next 3 years as well. Currently, they have 156 stores. So surely that doubling of stores, increasing their reach, increasing their footprint will be a bit of an issue that we should be keeping an eye out on actually in terms of restaurant brands as well. And, when we look at Westlife Development, the McDonald's franchisee in the west and the south region, they've actually launched gourmet burgers coming in as well. And if furthermore, that is the chicken gourmet burgers, fried chicken as well. We've spoken about that. So if that actually goes through even in the north and east region, you will see a sharper increase in terms of the revenues of the company as well, which will help them further aid in terms of margins of the company, improvement in terms of Connaught Plaza, and obviously more traction that they will start getting and a competition to Restaurant Brand Asia.
Well, thank you, Winnie, for this good details about the Restaurants Brand Asia and how the competitive intensity is expected to rise in the north and the east region. Now, moving on, let's focus on the management meeting of Prince Pipes. Now, they met Nuvama Institutional Equities, and let's look at the key takeaways coming in from that meeting. And we have Ashisha back with us to give us more details on the same.
Yes, so Nuvama met with the management of Prince Pipes, and on the back of this management meet, they've come out with a note where they say that PVC prices are likely to trend upwards in the near term, and the rise in price will be driven by curtailment of global supply. They've also spoken about volumes and margins in detail, where they say that they are confident of healthy volume growth in the second half of FY23. This will be led by healthy demand as well as channel restocking that is being done. They've also spoken about margins, where they say that margins are expected to normalize by the fourth quarter of FY23. Volumes have picked up, and they've maintained their double-digit guidance for the rest of the year. They've also spoken about key priorities, where they say that they are focusing on branding, distribution and innovation. Channel financing with recourse operations will be eliminated within the period of next 3 to 4 months. So they've spoken about volume growth, and they've maintained their guidance as far as volume growth is concerned. And on the back of these takeaways that are coming in, Prince Pipes will be in focus today.
Shesha, thank you so much for that update on Prince Pipes this morning. But let's talk about maybe phone bills that are going to see a rise coming in, Somit. Is that the case? Because Airtel has hiked some entry-level tariffs in certain regions.
Well, they did hike some entry-level tariffs in certain regions, but we can definitely not say whether it's going to be an all pan-India basis tariff hike or not. So if you see what telecom companies have been doing now, they took the first big hike in December 2019. That was a hike of around 30 to 35%, and all the listed telecom players, that is Jio, Vodafone Idea, and Bharti Airtel, had taken this hike. Then they skipped 1 year, and then there was a second big tariff hike that had come in December 2021, and that was around 20 to 25%. Again, in the December month, we can now there have been rumors that there could be a tariff hike, but we'll have to wait and watch how it goes out. Now, Airtel in the conference call has been continuously saying that they need to take their ARPUs over the 200 rupees mark over the medium term, and one more round of tariff hike would do that for the company. Now, Vodafone Idea has also upfrontly said that they also need a tariff hike, tariffs of ARPUs of about 200 rupees to sustain their business. So a tariff hike is at least necessary for both these companies, especially for Vodafone Idea. Now, what could be the challenges for the telecom operators to take another tariff hike? Firstly, inflation. Another tariff hike could pinch users much more, because in the past 3 years, if you see, tariffs have already gone up by around 50%. So another tariff hike coming in would definitely pinch users and could also force them to downtrade. Now, what does downtrade means? It means that earlier a user who was doing a recharge of 300 could limit its usage and do a recharge of only 200 rupees. So that would also lead to lower ARPUs for the company, despite the fact that they have taken a tariff hike. So that's another risk that is coming in. And the third risk is a tariff hike could also lead to a delay in 5G adoption in the country. Now, telecom companies want higher or quicker 5G adoption, but a tariff hike could lead to a delay in this. But what are the factors that are in favor of a tariff hike? Firstly, the 5G capex. Now, telecom companies need to do massive capex to deploy 5G on a pan-India basis. So that's one factor that could push telecom companies to hike tariff, which would lead to more cash flows and more and better capex management for them. And recently, if you see Airtel, as Vinny was mentioning, that they had taken a tariff hikes in a couple of their circles, that is Orissa and Haryana. So this could mean that the company could do a tariff hike on a pan-India basis also going forward. Now, as you can see in the chart, the ARPU movement of the telecom companies in the past two tariff hikes, Vodafone Idea's ARPU has moved up by only 22%, that is the least in the industry, while for Reliance Jio and Bharti Airtel, if you see, the last two tariff hikes have helped both the companies to increase their ARPU by around 39% for Jio and nearly 48% for Bharti Airtel, which clearly shows that the tariff hike has been flown much better for Bharti Airtel in the last two instances.
Okay, Soumit, thank you so much for that update coming in on the telecom space. Hoping we do not see a tariff hike actually coming in this time around as well. But let's talk about the FMCG major HUL. As we all know, that Sanjeev Mehta has been leading HUL as the CEO and MD of the company since 2013, and he was renewed and reappointed for a period of 5 years that will be ending in next October. So now what HUL is doing is they are looking at someone, and they've shortlisted a few chief executive candidates to take over Sanjeev Mehta when he steps down from his role as well. And in the front runners, we do have names coming in like Rohit Java as well as Priya Nair. This is all according to the ET reports that we are reading, and according to the executives close to this development has spoken about this as well. Let's keep an eye out on this. Surely a lot of changes whenever that have happened in the CEO's ENA. FMCG company is very important, and a lot of movement that actually happens in terms of stocks as well. So surely HUL is something that we are watching out for. Sanjeev Mehta will be ending his leadership in 2023. So keep an eye out.
With that, it's a wrap on this edition of Market Cafe. We'll be back with more news on the other side, so stay tuned.